So tell us what you're doing then, CoinPit, because I don't know. Like I looked at this, Swapman sent me the link, and I looked at it and thought, yeah, functionality looks like it's kind of working. Show me it later when it's actually a usable product.
Well, I mean, let me just step in first to say, like, I mean, I'm really excited about the system. I think the big innovation is this multi-sig, trustless, verifiable system that is put together. This, I think, I mean, and all the other stuff, like it'll work out the platform stuff. But I mean, this is something that should be really appreciated, and that's what I think is the biggest innovation.
Yes, and we basically realized that our front end is still needs a lot of work, but the back end is something that we really expect to be a sort of platform, and we have a REST API and a Socket.io API, and people can write bots and they can write their own clients and they can do anything they want. That is what we want to basically facilitate, and we believe that through interaction with you. With actual traders, we can develop the platform into really let the traders drive the direction of the platform.
So
I stepped into this a little bit later. Can someone tell me or CoinPit, what company are you with?
CoinPit is a company that is incorporated in Seychelles.
Yeah, this is the game. Don't you remember I was telling you about the trustless, loginless futures exchange, and that we were talking with him before and all this?
Oh, yeah, okay. Continue.
Okay, so CoinPit, yeah, so you said that people can build their own clients for it, right?
I'm sorry, could you repeat that?
You said that people can build their own clients for it, right?
That is correct. It is completely, the app you see completely is driven off the REST and the Socket.io API. So once we publish the API, anyone can write their own clients.
Yeah, but it also depends on the details on how exactly the engine is written. Like, for example, how you treat margin is really important. Like the details on how exactly... whether you can isolate the margin positions and all this kind of stuff. Like, I mean, I know you have the stops set automatically and all this stuff like that, but in terms of how exactly you can treat the margin is an important distinction, because, for example, on OKCoin, on their back end, the way their engine works is you can open and simultaneous positions long and short on the same contract, because the way their orders are treated are open long, close long, open short, close short. And so they have it in a really messed up way. And then BitMEX does it the way you're supposed to with this, net position on the contract. But so there's differences in how, in Bitcoin land at least, how these margins are treated. So how are these handled on your back end?
Yeah, so this is handled pretty much similar to any other real futures exchange. So if you're long one contract and you sell to market, you'll become short one contract. Margin, what we do is margin is basically accounted for when you place an order. We automatically allocate margin for your trade. And that margin is not available for withdrawal or anything like that, because otherwise, anyone who loses a position will simply withdraw all their, coins from the account. But other than that, it's all automatic. It's all happens behind the scenes. And go ahead.
Well, I mean, you can finish. I mean, so it's a different thing. So you can, you go.
Yeah. So basically, the overall idea is that we want to keep the coins safe safe and touchable by anyone except the user. And when he places a trade, the amount of margin that needs to cover that order or position moves away from the user's control. And once the trade is complete, the coins are again released into the user. And at any given point in time, you can clear your account, subject to, of course, the Bitcoin network's delay, which is 10 minutes or depending on the network rate.
But are you able to, for example, say I deposit one coin, and I want to just take a position in one contract, and I don't want to use, and then I think whatever the margin requirement is for the one contract, maybe I don't want to use all one Bitcoin as the margin to back it. I don't want to have a portfolio or cross margin. What if I want to actually just segregate the funds so that I don't have to worry about the balance on your exchange you use to cover a losing position? If you just want the losing position to die and get out of the position, and then when you have more and more contracts, for example, people don't want to. They want to maybe like save some of their margin for other contracts, and they don't want to have one losing position on a contract start sucking away the margin on the exchange.
So when you place one contract, only the amount needed to cover that one contract goes out of your control. So let's say your balance is 1 Bitcoin, and the margin requirement for one contract is 0.2 Bitcoins. Only 0.2 Bitcoin goes out of your control, and no matter what happens in the exchange, that is the maximum you can lose.
And then what about
the maximum you can lose?
Okay, so it's the maximum that I can lose. So then what happens when I average in on the price? Like I want to keep buying to lower my average price. Each one of those contracts is considered separate, and the margin is just allocated fixed, and then that's that.
That's correct. So let's say you're long one contract, and you want to add one more contract. So now you are too long. So therefore, the margin that moves out of your control becomes 2 times the minimum, 2 times the allocated margin for that contract. So the 0.6 BTC or whatever is still in your control. You can and nothing in the world can take it away from you.
Okay, cool. That seems pretty clear then. I just like to see. I guess I want to get a copy of your API documentation just so I can see exactly how it's treated and everything. If it's that simple, then I think it's that's a good way to do it. Because crypto facilities and BitMEX, when you do this cross margin and portfolio margin that is covering for your whole account, I think that what BitMEX allows you to do the fixed margin, actually, you can isolate it, is what they call it, isolate margin. But I think this is good that you have it just by default. But what about then, you don't have then the ability, if you are losing on the position, then you don't have the ability to save it by backing more margin on it.
So at this point, we don't have that, but that is something we want to add. So because we have a fixed margin allocation, it also means that your stop size is sort of fixed. You cannot indefinitely loosen your stop. So we want to enable, one of the first things we want to do if traders prioritize this is to enable the trader to enter how much margin they want allocated to a given trade. And as the trade is progressing, allow them to increase that amount of margin, which will enable them to loosen stops on that particular trade. We want to make it as automatic as possible. In other words, if you simply loosen your stop, we will automatically figure out how much margin we need to allocate and just move it to that trade.
Okay, yeah, because that would be because it's good to have it isolated, but it's also good to have the flexibility if you want to use more and back up a position more to have the ability to do it, at least to elect to do it. But back to the main reason why Flipper wanted to talk with you and what you were asking about with the interface. I mean, you have so much real estate there, like on the screen. Like you don't need to have 90% of it just being a huge chart. Like there's so much you can do there, and the BitMEX is really honestly kind of the model there because you can basically stay with one screen everything you need. You don't need to click around. Like Kraken is like the opposite. They're like the worst because you have to dig through layers of stupid tabs and just to can look at the order book and then look at the order panel, and I mean that's a mess. You don't want to have to click around into different pages and layers. Like it's good to just have everything accessible right there, and you have so much to work with that goddamn chart, so that if you loosen that, there's so much more to do.
Point taken. And we want to do what traders want, and we will most certainly go in that direction. I'm not sure we have enough time to do that before the launch, but we will certainly go in that direction.
Hello. Yeah. Pishek, you can. Pishek, have you used his site CoinPit? Have you looked at it?
Yeah, just launched it. I'm looking. There is no login or something like that. It's all based on a web browser.
Yeah.
Okay, so there is only one type of contract so far?
Yes, we are starting with one contract because we want to basically iron out all the issues, make it usable and tradable before we keep adding contracts.
Yeah, I totally understand.
But I don't think...
Can you tell me?
Hold on one sec, because, I mean, are you going to launch without having the order book viewable? I can't see the order book anywhere.
So the depth of market you see on the right-hand side with the green and red curves, that is actually the order book. The numbers are not displayed, and we can simply display those numbers right next to it.
Yeah, I mean, you need to have it just like bid, ask. I mean, you have to show it like the whole thing, man. Like we need to, especially in futures. It's not a CFD side where you just, okay, there's a spread and you hit whatever side you want to hit, and it doesn't matter what the depth is because it's just the broker is taking the other side. But when you are dealing with counterparty contracts, the market depth is, and not just with a green or red line, but actual numbers, so you can see it. Especially if you're trying to make a big position, you want to see what you need to see exactly what's out there. Yeah,
so we will most definitely add that. We'll definitely prioritize that feature.
I mean, I think honestly that you can't launch without letting people see the order book. They have to see it.
Sounds good.
I mean, I'm not just because I mean, I know you're pushing the launch. I think you're doing it next week or something. But when it comes to futures, you just really, and I'm not trying to repeat myself, but I just want to emphasize that the order book's not there, and people are going to be trading blind. But yeah, I know you got a lot of things you got to prioritize, right? That's always the issue when you're developing, and especially as a startup, bootstrapped, you need to make decisions on what to put it first, and there's all kinds of things from the front to the back end. So I understand the predicament that you're in.
Yeah, and so definitely we wanted that's on our features. We just we had to cut it out for the launch, but if that is going to make the difference between trading and not trading, we may push the launch back further and try to add it in there.
Yeah, I mean, it's just because that's just so crucial to be able to see what. Because it's counterparty, you're not a CFD. I mean, you're definitely not a CFD, right? Where's the liquidity coming from? It's all your customers that are putting their money on the exchange and putting limit orders using their margin to do so, right? So that's all counterparty based, yeah.
Absolutely, yes.
Yeah, then I mean, you absolutely. It's so critical to know how big that spread is. And not just with little green and red line, but the actual numbers, how big that spread is, so you know where to slide your limit order in and things like that. I mean, it's to me personally, and I don't know anybody that would trade on without the order book visible when it's not a CFD side. I wouldn't be able to, because I would just, it feels like trading blind when you do not have the order book.
Sounds good. Good suggestion.
How do you feel, Gimp, about that? Do you agree?
Yeah, there's no way I could trade without an order book.
Does anybody disagree? I mean, the exception I would think about is CFD sites where you're just like you're gambling basically, and you're just hitting the spread, and the bid and the ask that they show you is all you care about. But when it comes to futures, where you know that it's just you versus other traders, like come on, you gotta see because people are flashing walls, and you gotta know how real the liquidity is. Like, I mean, we've got traders here that are staring at order books all day long of multiple different Bitcoin exchanges to analyze and reverse engineer what the hell is going on. Between all the spoofing and the fake volume on OKCoin, like there's a lot of stuff that people recognize in that. So I mean, it also speaks towards transparency as well. I mean, that's the thing. I know that obviously because I've been following a little bit what you're doing principle-wise and philosophically. So I know that obviously you care about transparency, and I wouldn't doubt your motivation on that. But when people see this release and they don't have access to see the whole order book, they're going to start thinking something strange is going on and that you're not being transparent, even though I know that's not the case. But this is the kind of way Bitcoiners think. So if they see that and you say that, oh yeah, it's all customers trading, well, we can't really see the order book though, we can just see the little depth on the chart. People will start to speculate.
Right. So the order book actually is being streamed to the client, and this is just the way we are rendering it. The Socket.io API keeps getting the order book streamed to it. If you look at the inspect window, you can actually see the order book values coming in. So it's actually there's not a lot of work for us to add an order book to the existing view. So we will certainly consider doing that before we go live.
Yeah, I mean, and again, I know that you're not trying to hide the information or anything like that. It's just that this is what people start to think. If you're releasing, and it's like, well, I mean, if it's order book futures, then why can't I see the order book? Like, this is how people will get nervous to trade with not being able to see this.
Point taken.
And another point I wanted to make though about even though something is available on API, like you can't assume every one of your customers is like a power user and even uses dev tools or knows how to access API and write their own stuff for it. Like, you should not assume this about, even though the average Bitcoin user has a quite high technical competence, don't overestimate your customer. There's a lot of guys that are really good traders are still quite simple about things.
Good point.
So, but other than the order book and using that, reducing the chart as a percentage and just being able to access price, enter quantity, everything in one shot is what my general feedback is. But Flipper, did you want to continue what you were saying before?
Yeah. What I was saying, CoinPit, was the order book. Obviously, I mean, basically, unless people are using it, nobody gives a fuck, and people will use it, but it's got to have a fucking good user interface because the principles are good on it. So I would just make it look pretty and usable, straight away.
Sounds good.
And the BitMEX thing, for the order entry, just look at that order entry, and just consult in here, all the time. Just use the BitMEX order template and the TradingView charts and put the order book on it, and you're instantly just a million times better. And then come back here and we'll just refine it for you. Just make it totally cool, really easily usable. Just bum. Fucking. And then I can speak to Constantine. I get the actual exchange, symbol listed on TradingView. Get it put on CryptoWatch as well. Yeah, and if it's
CryptoWatch, you have to pay for
and everything.
You have to pay for CryptoWatch listing.
Really? He's doing it now?
Yep. I know other.
That's cost data, doesn't it?
Yeah, I know other exchanges that are bitching about. I shouldn't say that, but they charge people for charge exchanges.
Yeah, I mean, at the end of the day, he does have to, keep the thing running.
But I was going to say also, like, I mean, obviously don't do like exactly what BitMEX is doing. I'm just the principle of like having everything accessible on one screen is nice. Like not having to dig through, like just as a general UX UI sort of thing. Like I mean, that's what I think. What you mean? Not like copy exactly how BitMEX, because there's otherwise you become like a BitMEX clone in a way that is just having this cool multi-sig login list setup, and I think you guys can bring something even more unique to the table anyway with this. Like also you are having this tick approach as well, so like I like this differentiation, so you're not just becoming like too much like BitMEX.
I don't know. I'm different type of trader. I don't need a chart of futures at all because I'm always looking at the spot trading as the major indicator of the price, and I would resign from the chart at all. But I'm
yeah. So then, Prishek, what would you say is the most important if you had to have one panel? What would be the most important piece of information then?
order book.
Oh, that's what I was saying.
Yes, order books. I don't know settlement price.
Exactly. No. You had the right answer. Order book. That's the most important. I mean,
Okay,
yeah.
that is the first thing I will add.
Yeah, but anyway, I don't want to beat the horse to death. But is there anyone else that has any like other kind of comments that have been using? Actually, I have a question about Seychelles. Why Seychelles and not Hong Kong, or why like what's the big deal about Seychelles?
Seychelles is where BitMEX is incorporated. It's where a couple of other Bitcoin exchanges are incorporated. So they seem to be okay with it as a jurisdiction. Many other jurisdictions, there's a lot more. So anything related to Bitcoin, they're a little more cautious, and it's hard to clear it. So Seychelles is, I think Whale Club also is over there. So a couple of exchanges. So we looked at all the jurisdictions, and this is what we found is most friendly to Bitcoin futures exchange.
What if that changes? What if they start to? What if I don't know, the banks start to pay Seychelles and get them to hate Bitcoin and some shit like that?
So then we had to go decentralized. We really started trying to go decentralized. It was just the trading experience was not very good. The delays were too large. So it didn't feel like a real exchange, didn't feel like a real trading platform. So at least with the technology when we started in 2012 or so, decentralized just did not work. But who knows, with the Lightning Network and all of these other things, it may technology has improved a little more. We will look into decentralized if possible. We probably will try to go there anyway in the next 2 or 3 years.
Yeah, there would be. I mean, like you said, the latency is really the only problem there. I mean, that's the benefit of a centralized approach, is being able to provide low latency data streams. That's the most important. Yeah, but so then when exactly were you planning the launch? Still this weekend, or when?
Yeah, we were planning to do it this weekend, but if you're going to add order book, we may have to push it back by another couple of weeks.
Damn, I thought you said it was simple to throw it in there.
Well, it is, but we have to test everything thoroughly, and you don't want to launch something that starts breaking the 2 days after you launch it.
Yeah, of course. I'm just trolling you a little bit. Sorry.
A thorough release than something is so in development. It'll attract a customer base much faster.
Exactly. And hey, as and when you guys think of, I would really appreciate if you just try to trade with it. I know that it's just test coins right now, so it's not fun. Which is why I really wanted to launch something so that people can trade and then find out what they don't like and what they want, and then just keep giving suggestions and basically drive the development process. So one of the reasons we wanted to launch early. So as soon as we launch, I would appreciate if you guys just play with it and just trade a few contracts, see what suggestions you can give. If you guys want to try the testnet side, it would really be good. It would, it doesn't cost anything if you.
Are you going to change the user interface before you launch?
We will certainly add the order book at the minimum.
Oh, dude, you gotta fix it. Not just add the order book, you gotta fix it. It's fucking unusable right now.
Yeah, price entry, man. We need to at least enter the price, like type it in as well. Like
you can do it. You have to click the order ticket button right now.
Okay, when nobody knows how to do it.
I know there are videos
which
we are producing videos, but we'll definitely try to put the price in there as well.
But that ticket window should just be like on the chart. Like why click something to make it pop up? Like why not just have it on the screen right there?
A good suggestion. So let me just give you a background on what the thinking was. So I'm a trader just like you guys. I trade using NinjaTrader and I trade off the chart. And for me, I generally trade near where the current bar is. So for me, doing an alt click to enter or a shift click to put in a stop order is much faster than typing in a number and so on. So it's really single click to enter and exit right now. You don't actually need to go to the order book unless you are going far away from the current price.
Okay, well, I'm just telling you now. Nobody's gonna. Fucking nobody's gonna use this.
Well, I mean, it needs to have. I like that feature of being able to click on it, but this shouldn't be like. I mean, there should be like an additional feature, not like the primary way of entering the information for auto parameters. I mean, I feel like it's fine, but there's a lot of people that want to build up different limit positions without like having to click around like that or interacting. I mean, I don't know. To me, I'm not wanting to enter positions by clicking on the chart like that.
Totally understand. Good feedback.
I mean, simple informations like fees and the leverage. Is there any? I can't find any information, so just try to put it together somewhere.
Okay, so most of the other information is on the My CoinPit link on the top left of the page. So this is the only place you have to click around is, and you have your entire account information there, including your trading report and all your orders and everything, your positions balance. And maybe that is the first thing we do is move it to the current screen.
Okay, thanks. I don't know if this is a good suggestion, but I think if you would be able to do a high leverage, like 5 times or even higher leverage for shitcoins, altcoins, for high volume altcoins, people would go for it because they're going for for Polo on leverage because they want more profits. And if you would be able to do more leverage for some high volume coins, they will come to you because they will see, oh, this is the only exchange, this is futures. What the fuck is futures? Never mind, but I will trade it because I can make 5 times more profit than usual. they will come to you and they will lose money there and they will leave you fees as well. So I think this is good.
Yeah,
and
so
like
But this is highly dangerous markets as well, because I don't know what's your idea of this continuous settlement, but it sounds good. But this market has shitcoins market has big swings, so even without leverage, they can be very profitable.
yeah, we can introduce a contract for some of the high market cap coins. So right now we're going live with only one contract, but once we sort of solidify the interface and iron out all the issues, we will most certainly introduce more contracts, and some of them will be altcoins.
I will come to you then.
And I was gonna say, like, as soon as I go on that, deposit. Where do I deposit to? Withdraw. Where do I withdraw to? Where's like my user ID? My save session with all my order detail. What?
Right. So all of that exists. I realize it's not obvious from the interface. So your user ID, your private key is your user ID, and if you go to your My CoinPit tab, you basically will see.
Go to where?
So there is a link on the top left of the page which says My CoinPit. If you click on it, it'll take you to all your information.
I know that.
Yes, and you see a user ID. You should see your user ID, your unsettled profit loss, commission per trade, your account ID, which is your multisig ID, and it should show the balance on that. You should see a margin address, which is where your margin has moved, and it shows you how much margin is right now in the margin account. So as and when money moves up and down, it will show you here. So everything is completely transparent.
Okay, so what you need to do is you need to sort out the mic first. Make sure that's on push to talk. And then what you need to do is you need to get that My CoinPit page and just stick it. This is like a temporary hotfix, obviously, in an iframe along the bottom of this live page. So all that information from My CoinPit is just in like a big fucking bar along the bottom, that everybody can just tab through and just cycle through and drag it up and down to make it bigger and smaller. And then the order entry and order book can then go like over on the right hand side, or maybe you can toggle it between either flicking to the right or flicking to the left. And so it's like order entry and order book, on the left. Fucking chart in the middle with trading view with all your trades on it, live order ticker on the right, and then underneath on the bottom that iframe of all your My CoinPit shit. Boom.
Okay, we'll try something like that.
Here's the million Bitcoin question though. The L word, liquidity. Do you have any like market making relationships lined up or anything like that to provide liquidity, because nobody wants to trade on an exchange with no liquidity?
We don't have yet. We will give liquidity rewards. Basically, the half the commissions from the market taker will go to the market maker. So you could, if and we're going to release the source code to a bot. So people can modify it and write their own bot. So you could make, some profit buying and selling at the same price, limit order, and you would get the market maker commission. So, but yeah. So, did you have any suggestions for adding liquidity other than just offering liquidity rewards?
Well, I like that.
Adding, sorry, swap one thing. If you're really doing a half commission to makers, that's awesome, and you will get liquidity for sure from the market makers, because they want half of your commission.
Exactly.
Yeah, that's exactly how it should be. So you this negative rate incentive to liquidity providers is exactly that. It took BitMEX a while to realize that they should do that. I was telling them also from day one. I was like, just pay people to provide liquidity and have the takers fucking pay for it. And yeah, it's a good system. So, but beyond that though, you should have like someone on your team that can manage market making relationships, where you can like accommodate their needs for API functionality, so that they can configure their bots and their code as easily as possible to yours, because you want to attract these market makers who are already active on other exchanges, basically, like because that already have tools that they want to just point toward yours, and if you already have the incentive in place for that, then you just need to, on the social end, I guess, be available and reaching out to find these market makers that are already out there.
Absolutely. We'll most certainly do that.
But other than that, it's a chicken and egg problem. I mean, every goddamn exchange out there goes through the same crisis. That nobody wants to be the first to put in the orders in the book. Nobody wants to be the one to close in the spread. It takes. People get nervous when there's not a lot of depth in the order book, and they don't want to take on a large position with this fear that they can't get out of it because there's no liquidity. And you get this problem very early on where if you don't have a market maker who is brave enough to quote a nice spread and give a little depth, you have nobody wanting to jump first. And that's going to be the biggest problem that you're going to find.
Yeah, so one of the features we have is that you should be able to trade even on a thin market with confidence, because you can get out anytime. The number of contracts is, it's even, right? So when you open long, someone opens short, and we have a feature where you will never basically go beyond your maximum margin allocated for that contract. And what happens if the price moves beyond that, because say there's no order support below you, that's basically the book is empty below you, is that we close both the long and the short position. So, because you are guaranteed, your loss is whatever is the maximum allocated to your to one contract. You should.
Okay, but let's put a different scenario, a different case. Let's say that I stack up I get 10 contracts filled. I just start on CoinPit right after the launch. I get nice 10 contracts filled, and the price goes up. I'm suddenly have a nice P&L of 20%, but there's no liquidity. There's nothing. I have a P&L of 20% based on the market price. How do I capture this profit if there's no bids for me to sell into?
Yes, that exactly is the chicken and egg problem, and I guess we do have to attract liquidity somehow.
By the way, chicken and egg problem. Egg was first.
There you go, CoinPit. You guys just need to have eggs. That's the solution.
Yeah.
Yeah, but if they're giving 50% of commission, they will definitely have some market makers. I think the bigger problem will be if they will have traders. But about market makers, no problem for market makers to just run a bot and take all these commissions on the $2 things up, down like we have these days.
So have you decided on an exact percentage of the nominal that you want to set the fee for the takers?
So basically currently on this particular thing we're trying out, the fee is 0.005 Bitcoin, which is about I think $2. So $1 would go to the maker. So our idea is that the commission will always be about half a tick. Whatever's the value of half a tick. So if we introduce a smaller contract, then it could be 1/10 of that, so it could be 10 or 11 cents. The only issue is we cannot have the commission smaller than the Bitcoin the Bitcoin network fee, because then we won't be able to do settlement. We won't be able to move money from account to margin and so on. So there is a limit to how small we can go. There's no limit to how big we can go. The smallest we can go is basically basically about 10 cents per contract. So we're going to start with, I think we're going to try with but 0.01 Bitcoin per tick, which is about $4 a tick, which makes it sort of like the Nasdaq YM contract.
So then on a percentage basis, what is that tick fee? What is it? So in order to compare apples to apples, we need to know what the nominal fee is. So could on a percentage basis.
So I tried to calculate it in various ways. It's a bit hard because of the way we do it. But if you look at the leverage, the margin requirement is about $100, and you make, I guess for $1 move, you make about 0.1 Bitcoin, something like that. So it's I have to actually calculate it, and I'll get back to you.
Well, I mean, if you just tell me, so you put down $100, you say, so one tick is 0.1 BTC, which is $40 about.
No, one tick is 0.01 BTC.
0.01. Okay, so then you're saying the fee is half a tick, which means that it's like $2 or something, or what?
That's correct.
Okay, so $2, and what's the notional value of that contract? So you put down $100, and what is the notional value?
So every dollar move is about 0.1 Bitcoin.
Yeah, but the contract value, the actual value, the nominal value of that contract is what in dollars or Bitcoin? How much is it?
So each contract is basically for it's an inverted contract. So it's really you're really buying and selling dollars in Bitcoins. So I tried to calculate it. It was about I think it was something like it came to around I think 10 Bitcoins or so. So I'm not actually sure. Why didn't I get back to you on that?
Yeah, I mean because this kind of information is really important, right? Because in order for there to be transparency, for the trader to have enough information to make to compare your product with the competitors, basically, is they need to know, because everyone, like for example, OKCoin, they standardize their contracts to be $100 per contract. I mean, that's just doesn't take anything to think about it. That's just what it is. And they also have inverse contracts, so you can do a perfect USD hedge on them. And then BitMEX, they have also I guess theirs is based on theirs is also a little bit strange, I guess, but they have like a certain one contract equals 0.0001 BTC or something. I forget how many zeros it is, but they have it standardized to a certain amount. I mean, this is like a piece of information that should be like the fee and the nominal amount of the contract, and then the percentage, because you say you put down $100, okay, but this as a percentage and everything should be nice and displayed. I'm looking at this specification, right? I feel like there could be more information there, like percentages, because people need to compare with the other exchanges, so they need to know what what these things are as a percentage. So the margin as a percentage, and what the nominal is, and what the fee is as a percentage. So that should be more information for traders to know.
I will get that information and add it to the spec and check back with you.
Yeah, because I think that I understand where you're coming from, where you're saying that you put down this much, and then the tick is this much, but it's just that, and maybe some traders think of it this way, but it's not like standard to think of it like that. I mean, I guess people do think of things more like, especially in higher leverage, where it's just you put down, you're betting a certain amount in margin, I guess. But I mean, I think a lot of people look at it as standardized contract units and knowing the amount that they're trading. And it's like, for example, BitMEX, they put their volume. They have 100x contracts, and they put their volume as a nominal amount. So they get to have 100x the volume that they display, because so if you put higher leverage and you are doing it based on a nominal basis, then it inflates your fees, it inflates your everything, your volume. So that's the natural route that these exchanges seem to go on, is that they introduce high leverage.
I would just like to say I don't like that. I think if this is like the true decentralized exchange dream that everybody wants, right, then I don't think people want to see it listed on exchanges with volume times 100. They want it to be the real order book. Yeah, they want it to be like the Finex, but decentralized.
True.
Yeah, I mean, when we talk about volumes, we just going to talk about the number of contracts traded instead of saying, so many Bitcoins, basically by multiplying it by some leverage or something like that. Because true volumes.
Why don't you just have one contract is one Bitcoin?
One contract is one Bitcoin. Yes, we can certainly do that. Whatever the majority of the traders are comfortable with, we have to go with that.
Yeah, but what's the leverage? How much deposit do I need to put to play with one Bitcoin as a total value?
So essentially, right now, the way we've set it up is that you basically have enough margin to cover your stop. That's basically it. So if your stop is 10 tick, you need to provide enough margin to cover 10 ticks from your entry price.
Okay, so on every contract you make, you need to provide your stop at the beginning of it, this, and you basically can change it later, right?
I'm sorry, what is the last part?
You can't change the stop price as you set it on the beginning.
Yes, you can change it. So right now, basically, you can tighten it, you cannot loosen it right now. We are working on the ability to loosen the stops, which will move more margin out of your account.
Okay, thanks.
So in other words, the only reason you're putting margin is to ensure that you have you won't go to negative, right? Your balance won't be negative and someone else has to pay for it. Other than that, we are pretty confident that we can allow you to trade with just that's the bare minimum we can actually take, is the amount required to cover your margin and the fees, right? That's basically it. So right now we sort of have it standardized at 10 ticks, but we realize that every trader has their own stops that they're comfortable with. Some people want wide stops, some people want stop below a bar, and so on. And we will enable you to do that. And when you place a trade, we will. So right now in the API you can do that, but through the interface we don't have that yet. But we'll enable you to do that. And when you loosen the stop, we will move the margin and so on transparently to the trader.
And the way that you, just to clarify, because I don't know if people that are like a couple of people here that are listening understand, but there's no socialized losses on your exchange. The loser, if there is a liquidation that somehow does not get filled, the winner just takes their margin, correct?
Yeah, we do not have socialized losses. Our trading is set up so that you will only hit your stops, and that's pretty much all you're going to lose. And the only situation is that there may be a 1% case when the market is very thin, and suddenly there's a huge market order that sort of creates a cascade of stops. So to prevent such a situation where you could have slippage beyond your margin, we basically terminate both sides of the contract, so that the trader who would have gotten a huge windfall due to this market manipulation or this huge order would basically get a small profit. But what it would do is it would guarantee that the traders on the losing side do not lose more than their stop.
But how are the liquidations triggered? Are they triggered by the market's last price on your order book, or are they triggered by the mark price? Do you have a certain index that you settle to that you also mark the liquidations and the profit and loss to?
So basically, when your stop, so when your stop triggers, if there is no, so normally when you trade, if the price hits your stop, your stop becomes a market order and it gets filled. And let's say during a very thin market, your stop is triggered, but there's no orders for your stop to fill. Only during that time, which we are hoping is a very rare event, what we would do is we would also close the counterparty's trade as well, and basically at the exact price of your stop. Therefore, you would not see, so the price would be basically your stop price.
Okay, so what you're saying then is that it's the last price in the market, so someone can manipulate the price and just cause your contract to be terminated by just manipulating one-way direction.
Yes, if the market is very thin, actually, this is better than the alternative where so we are trying to avoid a May flash crash type of event where the spreads become so large and the stops trigger other stops and there's a cascading event which simply keeps dropping the price all the way down, and there's no stop, right? So what we want to do is we want to prevent someone from influencing the market with a large market order during a thin market, and we want to disable that. So during 99% of the time, as long as there's some orders around your price, this will never occur. This situation would only come up when the market is very thin. There's only 4 or 5 items in the order book, and then somebody with the little deep pockets decides, I'm going to take out all the stops and try to basically cascade all the stops, and then they just put in a 100 contract market order. So this is what we are trying to basically prevent, and we are also trying to prevent our traders from losing more than their stop. So we don't want them to have an unexpectedly large loss, wiping out their account.
But how about, I'll talk about an unexpected loss. What about if I go long on your exchange, Bitcoin price goes up, and I'm expecting a profit, but some manipulator decides to go into your market and sell it down, and I'm forced out of my contract, I'm terminated because some guy manipulated the price down, even though the spot price went up. How does your system safeguard against this?
So let me try to understand. You went long and then someone put a bunch of market orders short to bring the price down. So technically there is nothing wrong with just placing orders, right? It's if the market has liquidity. The only time you can actually do manipulation is when the market is thin. When the market is pretty thick, you would need substantially deep pockets to influence the price in that way. And as long as the orders fill the counterparty's orders, it's not technically manipulation. Manipulation would occur when you really gain from doing something like crashing the market or taking it up very high so that you can profit from an unexpectedly large move, and you sort of dump it all on the other side. So, and in many ways, there is no bulletproof way to prevent this. What we are doing is we are reducing the chances that can occur, and we are eliminating the situation where traders' margin, traders' balance goes into negative because stops have cascaded. And this is done by basically, closing both sides of a counterparty when there are no orders in the book to fill the stop.
Yeah, I understand, but I just think that it's dangerous to allow these liquidation events, these termination events to occur based on the last price in the market and not some kind of mark price in order to defend better against some kind of manipulation. Like, I mean, I feel like there has to be. That's actually standard. I mean, OKCoin kind of doesn't do this. I mean, they have like they do it mostly on last price, but they have some like wick protection kind of thing they do. But Crypto Facilities does this, BitMEX does this. They use a mark price of like an index of like multiple other, because you settle to an index, don't you? Or like, what are you settling to?
So in futures, you don't actually settle to an index because the settlement is between the various contracts. So this is a pure exchange like the CME, right? This is like a ES contract. ES doesn't really settle against the S&P 500. You settle based on the contracts that have traded on this exchange. So we settle. So right now we are experimenting with settling once every hour. The contracts that are closed, your coins move into your account once every hour. It may be too frequent. We're thinking of going once a day because every settlement is really so many coins on, so many fees on the Bitcoin network because all our money is on the Bitcoin network.
But wait, hold on. Maybe what I mean then is expiration. When the contract, for example, let's say I'm short ES U16 right now, right? The September ES contracts. That means that they're going to expire, right, in September. So what I mean, I guess, is like you have to have some kind of way when you expire and handle the contracts that there's some spot that it settles on.
Right. So we are going with the continuous contract. It's just like the ES has a continuous contract. Basically, it continuously rolls over. And the reason we can do this is we do not allow you to trade without stops and targets. So the reason contracts expire in futures is otherwise people who would lose would simply hold it indefinitely, like they could hold for years. So you need to force a settlement, and that's why there's an expiration before which you need to settle it. When you trade with mandatory stops and mandatory targets, you can look at it like you are settling every day, and every other day you are entering the contract again. And that's basically our model. So this also allows you to basically, if you want to hold beyond so the settlement boundary will not basically add friction to your holding overnight, for example. So if you want to hold contract for 7 days, just because there's a settlement, you don't have to get out and get back in again.
I guess I'm just okay. So I'm starting to understand a bit better now how it works. I mean, I think you should write really good documentation that goes over all of these things. By the way, like every way imaginable. Because even though only a minority of people are going to, like me, will actually read through it, I think if someone like me needs to be able to understand it on that level. And I'm starting to see more and more how you're doing it then. But I'm a little bit confused at how you are going to. My concern is the safeguarding against manipulation. And what if you don't have any mark price system and you don't have any index that is settling on? Where's the price? What's the motivation for the price to be anchored towards anything?
So this works the same way as really any futures contract. The the prices are always created by price discovery on the exchange, and the prices sort of stabilize or they find each other through arbitrage. So, there are, so for example, IBM is being traded on 5 or 6 exchanges. However, the price moves in lockstep because this is all done by arbitrage, right? And in the Bitcoin world, arbitrage has a little more friction. Therefore, you'll see a little bit of difference between the prices on different exchanges. But for example, BTC-E does not say, we're going to set our price based on Bitstamp or the other way around. Arbitrage makes sure that they sort of move together, right? And as volume, for say 10 years down the line, when volume can be pretty large, they will sort of move lockstep, just like a fiat exchange. The reason we cannot mark it to some other exchange is because that would actually mean that we don't have price discovery. So to have
how can we arbitrage it if there's no spot market that is based upon in order to have a cost?
So basically, so depending on the contract, you have a spot market for something somewhere else, right? So, for this particular contract that we are going with, this is basically the Bitcoin price, and the price would be different on every exchange, right? And it is natural for prices to be different on every exchange, even for spot price. So, for example, BTC will always have a different price from Bitstamp and so on, right? But when you have a futures market, you can definitely look at it as, someone would trade this futures market because they would be hedging against any of those markets. So I get what you're trying to say, that there needs to be some sort of composite for people to have a reference against.
Exactly. What's to prevent? If there's no spot reference, then what's to prevent them from just setting their own? Whoever's got the most money on your exchange can just set the price whatever he wants.
And that's how it works in the real futures exchanges, right? So if you have enough capital, you could move the price of oil by a couple of dollars, right? You could just put a bunch of orders. But what would happen is, over time, the price would automatically correct because there would be an arbitrage opportunity.
But where's the arbitrage? Where's the arbitrage opportunity?
So you could, so let's say the price on my exchange is 422 and the price on Bitstamp is 421. You could sell on this and buy on the other, right?
Yeah, but the problem is that there's no reason to think that your price is going to converge to the other. Because there's on spot exchanges. Oh, can you? I think you have a push to talk thing. Yeah, okay. When you on spot exchanges, they are depositing fiat, exchanging that fiat for Bitcoin, and there's over time the frictions between moving money between the spot exchanges gets less, and then there's real arbitrage opportunities to exploit the price differentials there. But if you're just creating a random futures contract and you don't have any anchor or any, because in the real, like you say, the real futures markets, there are. Even if they're continuous, there are still mechanisms like that the underlying is related to. Like even if there's contango, like the local contracts that are settling, they're still settled to they're still. And maybe I'm not getting the technicalities exactly of certain of the contracts wrong, but there has to be something. Like you're not the CME, you are CoinPit, and you're not going to have a thick market when you start out. You're going to have a very thin market. And this is the reality of it, and there can be, you have to have some better way to safeguard against people that will just manufacture prices. And you can't just assume that there's going to be arbitrage because your price on your small exchange for futures contracts is different from a spot exchange. There's no arbitrage there because I have to basically, if yours is underpriced, I have to just hope that some trader is going to want to bid up your market because you're not actually a spot exchange. So I'm not actually buying Bitcoin on your exchange. I'm buying like a contract that doesn't even have an anchor to to an index or a value. Like there has to be something that gives me confidence that the price is going to converge to an actual value of something. And if you're not settling the contracts on an index or Bitfinex or something, then why would I have any confidence that it's going to settle on a reasonable price?
So what happens when you and I enter a futures contract is that we agree that at a certain point in the future, I will deliver so many dollars to you and you will deliver so many coins to me. The contract is between the two counterparties. And the contract, most contracts today are settled financially. Like you don't actually, like when you get into a contract for oil, for example, you have to physically deliver the oil. But in many other contracts, it is basically settled based on the price difference, and the price difference is determined by the contract specification, which says every tick is worth so much, right? So in futures, it's a derivative instrument. It actually does not depend on the actual underlying at all. The underlying is what is delivered. The price of the underlying does not impact the price of the actual contract in a purely technical sense, right? So in theory, for example, you and I could, and this is really the definition of futures, right? Say I'm a farmer and I want to sell wheat, and you and I agree on selling wheat for 2 pounds, $2 a bag. Even if the price of wheat goes to $500, the fact is our price is still $2, right? So, and this gives rise to arbitrage opportunities and such, but the price itself has no real relationship other than the fact that if there's a healthy developed futures market, someone could buy a futures contract here and sell it over there. So technically, settlement is really the settlement of what two counterparties owe each other. It has not much to do with the price of any other instrument over there that it's based on.
Well, then it just seems that there's way too high of a risk of the price being divorced from reality. Like, I mean, traders need to, like, every other futures contract out there is not working this way. They actually settle on real spot, because you have to be, if I'm trapped in a contract that's not so liquid, I want to at least know that when it expires, that the P&L is going to be settled on what I can see in the other markets. Like on crypto facilities, it's something like the top 4 spot exchanges. On BitMEX, it's some other like 5 index thing. On OKCoin, they also do 6 exchanges, 3 Chinese and 3 Western exchanges. Like every other futures exchange gives you the confidence when you are in a contract that it will expire and settle on a reasonable price that reflects reality. Like, I mean, I don't think that you are provided, because maybe you're expecting more liquidity, but and maybe this arbitrage mechanism is not. I don't think it's properly incentivized, because I don't think if it's underpriced on your exchange that necessarily people will be confident in that it will actually correct to a proper rational price. I don't think the arbitrage is properly incentivized. I think that you need to have some kind of anchor, some kind of something to give people like some confidence that their contract has some basis outside of the traders on the market.
That's a good point. I will most certainly give it a lot of thought. But as I said, when you're trading, if you are trading a continuous contract, you can get out at any time, and you get out at whatever price that's being bid or offered on the exchange.
But that's the thing. But this is the if there's an order book, if there's liquidity, like you said, bids and offers to get out, then you can. If there's not, then you can't. And then what are you settling on? Just the last price? And then what if because eventually, like you said, it ends at some point. So then you settle on what the last price was, right? Or whatever is in the market, or it doesn't.
So it's a continuous contract. So it actually constantly settles. You don't even realize it. From your perspective, there is no real end date on a contract. It's always, there'll always be a bid, there'll always be an ask. There is no date at which the whole book has to dry up and be reset. So the only issue you would have is suddenly, there are no other traders basically. So in which case it's just you and your counterparty, and you can close your positions, and the book could be empty.
Well, how do you close the position? Is closed based on what? Like if you are settling that contract, it's based on the last price, or how are you settling it if there's no other liquidity in the market?
So minimum there will always be two parties always in a contract, because a contract by definition is between two parties.
Right.
And so when you enter a position, you will have a stop and a target, and you can exit at any time by closing your by either clicking the flat button or closing your target orders, your exit orders. And the moment you close, if there is liquidity, if there's someone else waiting to buy at that price, they will get filled. If not, if there's nobody else in the market, it's just you and me, and you want to get out, what will happen is my counterparty position will also be closed. So you can always get out, even if you and your counterparty are the only people in the whole exchange.
And how are you? So is there like a terminate button where you can just terminate out like?
Yeah, that's a flat button. So if you click on flat, all your positions are closed out.
So does that, in practice though, hold on. In practice, does that mean that because you're forcing everybody to have a stop and a target, in practice, does that mean when you click flat that you're just hitting their forced stop, or what?
Only if there's no liquidity, only if there's no other parties. Otherwise, you are just exiting your position, and you are filling the entry order of some other user.
Okay, but at the worst though, you're saying that you end up, and okay, that makes sense then why you force people to have a stop and a target, because then you're forcing the ability to get out, even in a situation where it's just two people.
That's correct.
Okay, that makes sense. I mean, you need to be able to this continuous contract. I mean, I understand it now, but it's just that you have to understand that this doesn't exist right now in Bitcoin. So this is why there's an educational curve that needs to be mounted by you. And I mean, I'm a pretty technical guy and I understand these things pretty well. It's taken me a couple of times talking with you to understand now how this continuous contract's working. So the educational front on, because this is so new in so many different ways, like you're offering a lot of different things now that I see it. I think this is it's good for you to not only for differentiating with their competitors, but also to educate people how exactly this works.
Yeah, we are creating videos which explain everything, all the concepts, the trading and everything else.
Yeah, I mean the main thing is like this comparing it to what people already know, because immediately when they hear that CoinPit, you're a futures exchange, they're immediately going to think, okay, that's like OKCoin and BitMEX, and you need to like basically show them that you're not like that, and explain to them how you're different, because this is immediately, it's just like it's how humans work, right? If they don't know what a Bitcoin futures exchange is, then it doesn't matter, right? But once someone actually shows them what it is, this is their picture of it. And when a second one comes along, this is what they're going to assume, is that this is also the same. So you have to really explain that this continuous contract idea, the forced stop and target, the termination versus socialized loss, all these things you need to explain to people so that they understand that you are not what they consider a conventional Bitcoin futures exchange.
And we will do that.
Yeah, okay. I'm just making sure this is like, because this is how people will think of it, and it'll clarify a lot once you do that. So, but I like what I see. I really like it a lot. Especially, I still think that the whole two-party multi-sig raw transaction refund, I love all that. I think that is going to be the real awesome part.
Thank you.
So in case Flipper got a very nice position long, and I got short as his counterparty, and he is very happy with his position because he knew something, for example, or the price is going up. I can make him unhappy by canceling my position, right?
No. If you close your position, what would happen is you would basically be exiting your position, and someone else would be filled. Someone else who is...
Yeah. I need another counterparty for that. Okay, thanks. Sorry, forgot about that.
So this only would occur if there is no one else in the exchange except you and him. Let's say everybody decides, there is something else new, something more sexy exchange that is out there. Let's everybody sell out and let's all close our position and go there. And you and Flipper are the only last two people left. Only in that case, when you close, he'll be forcibly closed. Otherwise, it's just like a regular, trading. When you sell, someone else who has an order at that price would basically get filled.
Yeah, contract flow.
Yeah, I think it's good. I think you're off to a good start with everything, and I think once you start to apply like a better UI UX, and you make the contracts a bit more accessible, not having like too high of a bar for. I think $100 margin is a bit when you're a totally new exchange and you're wanting to invite people to put money and trade. Like, even though you're not full custodian, and that's the whole point, it's still to get people to at least try a little bit. Like, they want to dip their toe in the water, not just with testnet coins, but with like being able to make a 0.1 Bitcoin position instead of just like, or whatever, like, smaller 0.01.
Right. So 0.2 Bitcoin is like $100. So are you saying that even that is too much?
Not for me. No, I'm saying that like in general, when you're like just a new site and you want people to trust you, like, okay, it's trustless, but I mean, like, you know what I mean, like to say, hey, I'm here, come use me. Like people, even if your system is trustless and login and all that, like, which is beautiful, and I appreciate it and everything, you're going to still have a lot of regular users that don't care about that so much, or just want to like come and try it, and they're not going to feel comfortable, even if they have full access to their own funds with the deposit on the with the site. They still want to. They're going to want to try with smaller amounts, like $10 instead of $100 or whatever, like or something. Like, I know BitMEX does it a little ridiculous, right? But they do it. You can one contract on theirs is like Satoshis or some shit ridiculous like that. So I mean, for me, 0.2 is just, that's dipping my toe in the water. But many others that would be more comfortable having putting up less for this.
Okay, we'll certainly introduce more contracts, both with smaller size and if there's sufficient demand, we'll also go with larger size.
Yeah, remember, they had the S&P standards that you had to put like ridiculous, like $20,000 margin on or some shit like that, and then it was just like, I don't know how many, like 20 years ago now, 15 years ago, they have these e-minis where you just put down a couple thousand and you can trade like, obviously that's an order of magnitude higher than what we're talking about here, but you're in a small space, right? Like in Bitcoin, and you don't want to have, even though it's $100 for most people, it's not so much, or for many people, it's still to have a lower bar. Just it's less reason for someone to say that they don't want to try it. Like if it's much, I can get someone to trade to at least try it if I tell them, just put 0.05, put some dust on there to try it at least. That's helpful, because the fewer barriers, the better.
Yeah, that's a good suggestion. We'll try to have another contract that's smaller.
Yeah, but man, I think it's great. I love that you're here talking with us again. That I love that you are like putting your ears out to the community. I think it's wonderful that you are building it with traders in mind, and I think if you continue this path, you guys are going to do really well.
Thank you. And as a trader myself, I want to build something for traders, not something for banks or something like that. If traders have to enjoy trading and find it useful. So your comments are really very, very valuable to me. All of you guys.
the biggest thing would be liquidity. The biggest goddamn thing. I mean, we've seen so many exchanges come and go, and I mean, that's the big. I mean, obviously, that's like liquidity is such a broad statement. That means like people coming in the door of your store. Of course, that's important, but that just really is like, because that's what I mean. The number one excuse that traders have for not wanting to jump on a new place is what? There's not enough liquidity. There's not enough volume. Blah blah blah. Why would I move when I already have plenty of volume? You know what I mean? Like that's the big issue.
Yeah.
Anyway, yeah, man, we'll always be willing to provide more feedback whenever you have any kind of questions. You wanted to try something, we'll always be around. Yeah, I mean, and don't take anything personally when people are giving any feedback or stuff like that. It's always in good. Sometimes, like Flavor especially, can be an asshole. Like he sounds like an asshole sometimes because he's British and acts like an asshole sometimes because I don't know. But just be aware that nobody means it personally. Everybody's loving.
Oh, I'm totally cool with any kind of feedback. I mean, I welcome it because if I don't get feedback, how will I get better, right?
Yeah, but it can be, even if we are sounding like we are being mean, we mean it from the heart. Like we have to say it honestly and directly in order to get the point across. But we always mean it with love.
Understood.